The following segment is sponsored by Northstar-Financial and Retirement Planning.
Is the stock market in a bubble, or is that not the case? There's been a lot of speculation about the market bubble, and it seems like everyone has an opinion. Joining us now, George Vossing and Zach Jenkins. George is an advisor, a fiduciary, and the president of Northstar Financial. Zach is also an advisor and fiduciary with the Northstar team. Northstar Financial and Retirement Planning is a local area firm that focuses on preparing people for a successful retirement. George and Zach, also popular radio show hosts. Good to see you this morning. Hi.
Good morning, Margaret. How you doing?
Good morning.
Doing well. So what's your take on all this? Is the stock market in a bubble?
That's $1 million question out there too, right? It's been getting a lot of press recently. We believe so. We think it's overvalued. Stock valuations are certainly, in many cases, definitely overvalued. So, what does that mean for folks out there? We have a lot of people coming in every day talking to us and giving us their thoughts on it. And it's basically across the consensus that, yeah, it seems to be ready to pop a little bit. And what we don't want to do is use this time to scare people. That's not our intent, Margaret. It's basically just be aware, understanding that the market it's not linear. It just doesn't do this. It does a lot of this. It's a lot of overbought, oversold, and such. So we really want to keep your eye on something that's significant, where you have a major downturn and it's prolonged. Somebody takes a major hit, it's going to take a long time to recovery. And if you're in retirement or close to retirement, you're going to need this money. That can really impact somebody's standard of living. So I just want to be cautious.
All right. Well, with that being said, then what recommendations can you share with our viewers?
Well, definitely being proactive. Just sitting and to wait to see what's going to happen, it rarely serves people well. So being proactive. A lot of folks, they've got more in their retirement accounts now than they've ever had before, being that the market's at an all-time high. So, making sure that, the positions that you have had in the past, those investments are still prudent ones and appropriate for now. Making sure that you understand what your downside risk is. I think a lot of folks would say that we're rather lucky to have had the recovery like we had from last March, with as devastating as that was and what that looked like over about a month or a month and a half's time. So, for a lot of folks that we meet with, they don't need, a 10 or 12% rate of return to get the job done. It's more about protecting what they've worked hard for and that they've saved for. And if they're nearing retirement or in retirement, there's no need to take risks that are no longer necessary. We use the proverbial take a knee. We say that a lot. A football team at the end of the game, when they've got the lead, they'll take a knee if there's no need to take any further risk. Yeah, don't get crazy. So just reevaluate, be proactive.
And I think with the market at this all-time high, you talk about a lot of people worried about it reaching a dangerous level, but today's circumstances are different compared with other high stock market times, aren't they?
Well, the worst words in the investment world is this time is different. It's cyclical. It's the way it works.
Dangerous words, right? Very
dangerous words. You got to just be very cautious with that too. And the party always ends at some point. We just tell people, and it's like, listen, it doesn't mean you can't participate. Keep going forward. I'm not saying go hibernate under a rock. We're just telling people, it's an ounce of prevention, pound of cure. It never came into apply better than ever today. And we just sharing with people right now. We're just doing reviews, saying, okay, where are you? You've got enough. Let's take some off the table, maybe put into something a little bit safer, protected, and continue to go what you're doing. But I'm not a big gambler, but you ever hear the expression "playing with the house money"? Mm-hmm. Yeah, you've done well. With your money, take that off and protect it. We have some great options where you can earn. The worst you can do is a zero. You can earn 5 or 6% without any risk. There's a lot to be said about that, Margaret. And sitting here like, listen, and it comes down to that magic number. The number is 8. It's sleeping at night, 8 hours of sleep.
Oh, yes.
Not worrying about your portfolio and just saying, I don't care what happens out there. We're gonna be good. And when the COVID thing goes, we're gonna bust loose, see the grandkids, and do what we want to do.
Well, you'll help us protect what we've got, weather the storm. Anything else we should think about before we let you go?
Well, just to kind of regroup with what we were pointing, some basic factors: proactive, not reactive. Mm-hmm. Everybody has their moment of okay, too much, and you're going to get out and put yourself in a bad situation. And the big thing, the lesson for anybody out there who's happily retired or wants to be retired to be happy, is you want to master your money. Don't let it master you. understand that it's a resource for you. Don't be enamored with it and say, listen, it's a tool for you and your family. Look and see what's out there, and don't try to keep up with the Joneses. Just worry about your own world. You could do that very well. Sleep at night. Like our clients come in. We had a review earlier, Margaret. These people have just got it going on. They're happily retired. They're enjoying each other, and they're sleeping at night. And what's wrong with that?
And let me add one more thing there too, Margaret. As far as being proactive, folks can go to our website, northstar65.com. They go scroll down the page, and you can click on a little button that says, what's my portfolio risk number? And that could be a good first step. It doesn't cost anybody anything to do that.
Not obligated. Right.
Not obligated to anything, but they can take a quick survey. They find out what their risk number is, and if they would like us to run an analysis on their portfolio, again, not obligated to anything, doesn't cost them anything. We can do that to see if their actual portfolio risk matches up with what the survey says.
Helps a lot of people with that.
Well, great. I think it's just reassuring to know that we have help in this area. You make it really easy to understand, and so we love talking to you about this. George and Zach, thanks so much for being here.
Thanks you.
Again, Mark. Thanks for having us. Appreciate
and
it.
for those of you at home, if you're currently retired or getting close to retirement and would like to learn more about how to help protect and grow your hard-earned savings and investments, North Star Financial has a great offer for you. Right now until March 31st, they're offering a complimentary no-obligation retirement report. The report will include potential tax-saving opportunities and ways to reduce the effects of market volatility on your portfolio. The team will schedule a phone call, video call, or future in-office meeting so they can speak with you personally and provide you with a roadmap going forward. The number to call now, 309-8146.